Well, this week, Rio Tinto greenlighted its long-awaited and technically difficult $20 billion investment in the Simandou iron ore deposit, not here in Australia, but in Guinea, in Africa. So what does that say about Australia's competitiveness, our attractiveness to global miners? I asked Rio Tinto's Chief Executive, Jakob Stausholm, when I spoke with him from London.
Yes, there's a long history, but you know, that is mining. Mining is a very long-term business. It doesn't take away from the fact that Mount Simandou is probably the highest grade iron ore on the planet, and it's good for the environment to extract it. It's complementary to our high grade in the Pilbara because this is really ultra high grade. Most of it, what we are extracting there, can go straight into a DIR, an electric arc furnace, i.e. it doesn't have to go through a blast furnace and will have a much lower carbon footprint. So it's good for the planet. We believe we can execute the project to the highest ESG standards. If we do that well, it will also be a country maker for Guinea. And we're not too worried about it. We have a world-class business in Australia, in the Pilbara. There's plenty of space for growing that as well. Simandou is a big project, but it will only contribute 5% of the world's iron ore needs. For us, what is important is to build a portfolio of different grades at a low cost point. And both the Pilbara and Simandou and the iron ore we have up in Canada are exactly in that best part of the cost curve.
Jakob, I just want to go to something out of this latest profit report. It shows your return on capital went from 25 down to 20%. Now, any new project you go ahead with has to reach those hurdle rates. What I'm wondering is whether that $20 billion you've invested in Guinea could have been otherwise spent in Australia developing iron ore mines here.
So, look, allow me to say one thing. 20% return on capital employed for a very capital-intensive company is amazing. Most capital-intensive companies on the planet never ever try to have 20% return. So yes, it's slightly lower than previous year because we are having lower prices, particularly the aluminium price is lower, but it's a great result. And back to where we can place our investments, I just want to make it absolutely clear. We love Australia. We have an amazing business in Australia. We invest a lot in Australia, and we will continue to invest a lot in Australia. But we also have this opportunity with Simandou that will actually make Rio Tinto stronger and complements our business in the Pilbara. So it's not really a choice of the one and the other. And may I remind you that over the last 4 weeks, we have made two underwriting of the two biggest renewable projects ever in Australia. A solar farm, the biggest solar farm in Australia, a wind farm, the biggest wind farm in Australia. That is several $7 billion of underwriting. So we are believing in Australia, we are investing in Australia.
So I want to ask about Australia's competitiveness when it's seeking capital and whether there's a real danger that Australia falls down those competitive scales. You know, with these changes to IR laws, we know that the energy transition's going on here, whether there's structural issues in Australia, which means our competitiveness for capital diminishes over a period of time.
The reality is Australia's success is Rio Tinto's success. I, as CEO of Rio Tinto, have to always be concerned about how can I make sure that Rio Tinto is competitive, and there's always kind of concerning developments. In general, the mining business in Australia is very competitive. We have made the point that we are concerned about the new IR legislation, a bit because the history scares us, because in the early 80s, we had 100 strikes a year in the Pilbara, and right now we have a very good cooperative environment between management and the staff in the Pilbara, and we want it to continue to being like that. So that's why the dialogue always with the government would be about how can we make sure that we continue to be competitive. The other area now that is really deep on my mind is that probably the biggest manufacturing in Australia is Rio Tinto's Pacific aluminium industry. And to try to decarbonize that, and make sure that it is competitive, because it's an export industry, is a big challenge. And that's why we work together hand in hand with the government. And I really believe that we have the same objective, namely that Australia wins, Rio Tinto wins.
So I go to that point. You've still got 17 mines in the Pilbara. Your costs there are rising compared with when those mines were younger. Some of them right now are aging. The question is, where do you get the replacement resource from over time? Is it in Australia? Is it in Canada? Or is it from Africa?
But specifically on Pilbara, it's from Australia. We got an amazing pipeline. We have just secured the Rhodes Ridge joint venture. It is massive, and it will provide almost unlimited optionality. The only problem is we can only bring it on stream by 2030. So in between there, we need to have a few replacement mines, and we need probably to run the mines a bit harder, etc., to keep the production. But we really have, for the decades to come, the long, enormous optionality. So I'm not concerned about the long term. I'm more concerned about the short term and how do we get things done. We have learned some tough lessons after Juukan Gorge. We are working much better, much closer with the traditional owners of the land. But it's a different way of doing mine planning. It's more intense. It takes more time, and for us to keep producing and growing our production. I should say they've done extremely well, the iron ore team, by growing the volumes in 5 out of 6 quarters lately. So we are on a good trajectory, but it is demanding.
Well, iron ore clearly is the dominant revenue source for Rio Tinto, but there's lithium there as well as aluminium, alumina, whatever. But lithium is the real growth area. It's been suffering, big falls in price recently. So does that sort of appease your appetite for going even more deeply into the lithium industry in the future?
We could, but we actually have a very big growth pipeline, and there's only so many projects you can do. As you know, earlier this week, we just sanctioned the world's largest mining project. We are building a lithium mine in Argentina. We have an amazing project that we are trying to get over the line in Serbia on lithium as well. And we have some prospects in copper as well, like Resolution in Arizona. So very quickly we will come to a situation where we can't do more projects at the same time. I've seen that the lithium price have gone down a lot. We have always believed it would be very volatile. We believe in that there will be growth of lithium. But the key thing is to develop the mines that has sufficiently low cost. I think there's a lot of developments that's far too expensive. And right now, prices on lithium companies, yes, they have gone down, but they're probably pretty expensive still.
Just a final one. I want to go to China. It's had significant setbacks in its property development industry with the collapse of Evergrande, you know, the major property companies as well. So also it curbs their ability to grow out infrastructure, to build new apartments. I just wonder whether your focus lies there in the future or whether increasingly diversify to places such as India.
Look, the one doesn't exclude the other. We're delighted to see the development of India, and India will consume much, much more steel in the future. Right now, they produce most of it, the iron ore themselves. I think at some stage they'll probably need to import iron ore, and we would love to serve the Indian market. But back to China. China is by far our biggest market, and I'm not an expert in all aspects of the Chinese economy, but the economy that we are seeing as Rio Tinto, the kind of physical industrial economy, is growing. Yes, there has been a contraction, actually almost 4 years contraction in the property sector, but it's been adjusted and it'll come back, not to the same growth rates as the past, but it will stabilize. The point is, what we are seeing right now is that there is a lot of growth in infrastructure. There is a lot of growth in certain industries. And that actually means that net, the physical economy of China is growing. When you look into China, they're really addressing climate change at the moment. They're building energy systems, solar, wind, nuclear, expanding the grid, building stationary batteries, building a lot in the automotive industry with electrical vehicles, the train has left the station. And that development requires a lot more aluminium, a lot more copper, and to a certain extent some more steel. So that is really what is prospective for us, keeps the economy going now and provides opportunities for the future.
Jakob Stausholm, great to talk to you. I really appreciate your time.
Thank you.